Okay, Greenback just came out with the new changes with the foreign earned income exclusion for the year 2022. This is a provision whereby people that are green card holders and U.S. citizens can actually literally get their taxes to zero, depending on their income amount and also where their income is coming from, without even relinquishing their U.S. citizenship. But the big thing is you've got to be outside the U.S. and you have to qualify for this a number of days that you're outside the U.S. to actually get this benefit. And you also got to file your tax return to do this. So let me go through the details with you, and this will explain to you more on this credit and how it works. Also, folks, if you want to legally get your income taxes to zero or how to get a second passport as quick as 45 days, do three things. Hit the subscribe button on the right of your screen right here, and you'll get new videos automatically as they come out. And don't forget to hit that notification bell next to it. And number two is I would like to hear from you. If you got a question or comment, just put it below. And number three is go to our website, www.citizenshipquickly.com, and just ask for some help. All right, now the foreign earned income exclusion, also called, I'm going to abbreviate this, it's called the FEIE. It's a handy money-saving provision that you're definitely going to want to be familiar with if you happen to be an expat, a U.S. expat, whether it be through the green card or actually being a U.S. citizen. Now, the foreign earned income exclusion, what is it and how does it work? Well, it's a tax benefit that actually allows you to exclude a certain amount of your foreign earned income, and it goes up every year. So, this is a great benefit that the U.S. government has actually allowed. And I think they're going to continue doing this. They've had it for years and years and years. Now, I'm going to call it the FEIE, which is abbreviation for Foreign Earned Income Exclusion, is one of the ways that the IRS helps expats avoid double taxation on their foreign earned income. Now, because the IRS assumes that you'll be taxed in your country of residence on your foreign earned income, it allows you to exclude this income from U.S. taxation using this FEIE. Now, how much can you actually deduct on this? Well, it's different depending on the year that you're actually filing. Now, they actually adjust this for inflation each year, but sometimes this can cause confusion since early projections of the new FEIE limit may underestimate or overestimate the allowable excludable amount. Now, the foreign earned income exclusion for the year 2021 was $108,700 US for per person. Now, for 2022, the foreign earned income exclusion will be raised to $112,000 US. Now, if you've got husband and wife, you can, and they're both filing this form, and you do a joint return, you can multiply that times 2. So you just take 112,000 times 2 is 224,000. Now that's a lot that you can actually, if it's over above that, then you're going to have to pay the tax in the U.S. But you also have other deductions that you can take on top of that, and so you can literally make a lot more and still keep it down to zero. Now, this has actually gone up over the years. Like 2020, the limit was 107,600, and then before that, the year 2019, it was like 105,900, and the year before that, 2018, it was 103,900. So it just constantly goes up every year. Obviously, if you relinquish your U.S. citizenship, though, as I'm going to show you here in a minute, you'll be a lot better off if you do that. It depends on your income, and where your income is coming from will determine how much better relinquishing your U.S. citizenship versus just taking this deduction, and how much it will make a difference. All right, now how do you qualify for the foreign income exclusion? Okay, now to qualify for this, you're going to have to fit one of these two classifications. One is what's called the bona fide resident of a foreign country or countries for an entire tax year. The other one is also called it's called the fiscal presence test, which is you got to be in a foreign country or countries for at least 330 full days during any 12-month period. So you really have what's called a bona fide residence test or a fiscal presence test. All right, now let's go over using the fiscal presence test to qualify for the FEIE. Now, this test is one way that Americans working overseas can qualify for this tax credit and save money on their U.S. tax return. Now, in order to pass this, you're going to have foreign earned income, number one, and this would include salary, wages, bonuses, or self-employment income. All right, now note that I didn't mention anything about dividends, interest, pension, dividends or distributions from capital gains. That won't count on this. You'll have to actually have to relinquish your U.S. citizenship if you want to be excluded off any of these type of incomes that's not earned income. Now, also you'll have to have a tax home in a foreign country. Now, this is often misunderstood when attempting to qualify for tax benefits, but a tax home is where an individual is permanently or indefinitely engaged in work. Regardless of where their personal residence is, to establish a tax home, you must have a work engagement expected to last for at least a year. And if you've retained a personal residence abode in the U.S., you can't be considered to have a tax home in a foreign country. There are some things that there are more to that though. Now, you also have to be physically present in a foreign country for the necessary time frame. All right, now this time frame is 330 days out of a 365-day period. This does not have to be on a calendar year basis. It can be adjusted over a 2-year span as needed to qualify. An important thing to note is that you must spend at least 330 full days in a foreign country, as partial days and time spent traveling do not account. Now, it's critical that you track the travel days, that do this carefully when you're planning to use the physical presence test, as you'll need to be able to show the details to the IRS if you're audited for this. Now, using the bona fide residence test to qualify for the foreign earned income exclusion works as follows. All right, now the alternative to qualifying for the physical presence test is the bona fide residence test. Now, in order to use this test, you must have foreign earned income, obviously. This is the same requirement as for the physical presence test. You must have income earned in a foreign country in order to pass the test and use the FEIE to actually save on your working overseas tax. Now, a tax home in a foreign country works as follows. This is the same requirement for using the physical presence test to qualify. You must establish a tax home by having a work engagement expected to last at least for a year or more, and retaining a personal residence in the U.S. means that you don't have a tax home in a foreign country. The bona fide residence for the specified amount of time works like this. This means that you must have been a bona fide resident of a foreign country for an entire tax year. The biggest factor here for passing the test is that you must demonstrate intent to stay in the foreign country indefinitely with no immediate plans to return to the U.S. All right, now having a home in the U.S. affects bona fide residence. If you're like many expats, you might still have a home in the U.S. What you do with the home and how you classify it can make the difference in the types of tax benefits that you'll get as an expat. Now, generally speaking, the government classifies your tax home where you primarily live and work, regardless of real estate or foreign rental income. Your abode is determined by where you manage your personal, family, and economic ties. Where your family is can certainly play a role in determining your abode, but if you show that you've established a residence in your host country by integrating into society, having a home and setting up a bank account, among other factors, your abode could be your host country. Now, as far as your property back in the States, you could rent it out, let your family live in it, or even, you can leave it vacant if you want to do that. You'll want to keep accurate records of your home in your host country. Also, since this will go a long way in helping to prove that you've integrated into the foreign society. Now, how are you going to qualify for the foreign income exclusion? All right. Now, before deciding which test that you want to use to qualify for this FEIE, it's important to fully understand the difference between the bona fide residence and the physical presence test. Now, often your specific situation will determine which test is the best option for qualifying for the FEIE. Now, for instance, if you're on a foreign assignment with a specified end date, but for at least 330 full days, you're likely need to use the physical presence test. Now, which form would you use for this foreign income exclusion? Okay, you're going to have to file a tax form, folks, to qualify for this. once you're confident that you qualify, you'll need to complete the Form 2555 form, which is part of your federal tax return. Now, to actually complete this form, you'll need to include, which test, whether it's a bona fide residence or physical presence test that you'll use to qualify. You'll need the dates that you travel internationally to and from the U.S. During that tax year, and your prior year Form 2555 if it's available, and then you need documentation of your foreigner income. Now, each expat's required to actually complete their own Form 2555. If you're married and you're filing jointly, each spouse will need to complete their own 2555 form. You'll then attach both forms to your joint U.S. taxes, your U.S. tax form. Now, what is the foreign earned income? Now, the FEIE also allows you to exclude foreign earned income from your U.S. expat taxes. This makes it important to understand which income qualifies as earned and foreign income. Now, let's look at earned and what's called passive income. Earned income is any income that you've earned by working, in like income from wages and salaries, which are considered earned income. All right, now, passive income, on the other hand, includes income such as interest, dividends, capital gains, rental property income, retirement income, and things like this. Now, let's look at foreign versus earned income. Now, generally, the IRS classifies income by where it's earned. So if you're living and working abroad, then your income is considered to be foreign earned income, even if you're being paid by a U.S. company. Now, the opposite is also true. If you're working in the U.S., your earnings are considered to be U.S. earned income. This is true no matter who pays your salary, whether it's a U.S. company or a foreign company. Now, let's look at common foreign earned income exclusion mistakes that a lot of people make. Now, thinking that you don't need to file is one of the biggest mistakes a lot of people make. According to the IRS, a frequent error is people not filing this 2555 form and thinking in their mind that they're not responsible for the tax on that limit for that year. And in other words, some taxpayers believe the exclusion actually rescues them from filing requirements if their income is under that limit. Now, you don't want to make this mistake. You must file the annual 2555 tax form if you're going to take this deduction. If you don't do it, folks, you're going to get yourself in a lot of trouble, and you're going to owe all these back taxes, penalties, and interest if you don't file that form. Anyway, folks, if you want to learn more on how to legally get your income taxes to zero, or how to get a second passport as quick as 45 days, do three things. Hit the subscribe button at the right of your screen right here. You'll get new videos as they come out automatically. Number two is I would like to hear from you. If you got a question or comment, just put it below. And number three is, folks, go to our website, www.citizenshipquickly.com. We can show you how to get your taxes to zero and how to get a second passport as quick as 45 days. And I look forward to talking to you on the next video. Take care.